Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, plenty of stocks to discuss and, we'll have a more in-depth discussion on the Reliance Group as well as with regard to that big media announcement that came in overnight. But for the time being, let's get in Dipan Mehta, Director, Elixir Equities, who joins us on the show. Hi, Dipan. Morning. Thanks so much for joining in. Dipan, I wanted to ask you about Shriram Finance now. The last couple of days, they were selling. Yesterday, in the last hour of trade, again, it went for a slam dunk. The street was nervous about it getting included into the Nifty. And now that's happened. Fundamentally, it's placed well as well. What's your take?
Yeah, good morning, Nigel, and thank you for having me on your show. Yeah, I think that there was some uncertainty around FNO stocks, non-FNO stocks being included in the Nifty, but I think I heard you that that's been kind of resolved. And certainly getting into the Nifty is definitely positive in terms of inflows because a lot of index funds are now, that number is growing and the AUM under that schemes also are growing. So that much more liquidity will come into the stock, which is quite positive. But from a fundamental perspective, the stock has been a bit of a laggard over the last 4 or 5 years compared to its peer group. And that's more to do with the kind of segment that it is present in, where in commercial vehicles, whenever the cycle tends to slow down, the NPS really shoot up. And that's the reason why in the past, despite the top line and the net interest income growing, the bottom line has got impacted with a high degree of volatility on account of higher provisions. And as of now, I think it seems to be well priced. So from a fundamental perspective, I wouldn't want to buy into Shriram Finance.
They won't want to buy into Shriram Finance. Got it. Well, we have a whole discussion lined up on that big announcement that came in yesterday. But I also wanted your thoughts, Dipan. Now with Reliance Disney coming together with a market share of over 40% and in this growing sports and entertainment space, do you think it's a win-win for both parties and how do shareholders approach it?
No, I think certainly consolidation always benefits existing players. And the larger the company, the greater the competitive strength that it has got. And more importantly, the balance sheet size will permit it to make large investments into content. Because end of the day, it's content which is the big differentiator. And, with this kind of resources available at the joint venture, I'm sure that the content quality will improve and they will again take on the competition with even more vigor. So great news, but, these things tend to play out over a longer period of time. And do keep in mind that the combined company will be quite a complicated company as well to analyze with so many moving parts. And it's not a single or a 4 or 5 channel company. So they'll have many profit avenues and many risk factors as well. So I'm just waiting for the entire merged entity to emerge and then, let's see how the various divisions play out and what really are the variables which drive the company.
Dipan, hi, good morning. Some would argue that the market perhaps was due a pullback and yesterday we got it. I mean, you've been also sort of slightly cautious, right, in broader markets, etc. SEBI yesterday sort of wrote actually the email is dated the 27th, which is the day before. But SEBI essentially describing the mid and small cap parts of the market as being frothy. It's unusual for the regulator to sort of in a straightforward way do that. So it's in a way, it's a call on valuations, right? When you say something is frothy and something is out of whack. But at the same time, because they're doing it, I thought it makes sort of one should ponder over it and spend some more time because most definitely they have more data than all of us do. And I mean, of course, the aim is to sort of ask mutual funds to be able to protect investors in case of drawdowns, etc. And just cool things down a little bit. Not such a bad thing. Your thoughts, Dipan?
Prashant, I think it's a step in the right direction. And I don't think it's just a valuation call which SEBI is making. I think the amount of volumes which are taking place over there, and then there is leverage positions, which is margin trade funding. They have access to that information as well. And also the kind of trading patterns, all of this was perhaps kept in account when they issued that email. And this is the right step in the right direction. I think mutual funds also need to be cautious because we are seeing a lot of inflows into mutual funds to SIPs, and we want the trust of the investors to be maintained, and there should not be any major upheavals, which cause these new investors to move away from equities. So from that point of view, I think having policies in place to ensure that if there's a redemption, how they take care of it, and to curb fresh inflows into small and mid-cap mutual funds is a step in the right direction. In any case, these companies have very low liquidity in terms of stock liquidity, and even marginal amounts can have a disproportionate rise or fall in the stock prices. So I think these are all great mechanisms to kind of cool off the market and ensure that investors are protected. So I think it will go a long way in that sense.
All right. Dipan, just stay on. We'll come back to you. We need to address that big still with us to talk about some more stocks that are in the news. Dipan, there are some downgrades that have come in on Tata Motors this morning. Very interesting. CLSA has downgraded it to an outperform from a buy. They still have a target price of 1,061 on Tata Motors. But I want to understand from you, do you think the best of the rally is behind us now on Tata Motors, or do you think there could be more to go?
That's a tough one to answer because Tata Motors is a very difficult company to really track and analyze, and they are full of surprises all the time, especially JLR. And because it operates in so many geographies, something does well, something does badly. But I have to admit that this time around, the December quarter and this fiscal, Tata Motors have been firing on all cylinders: domestic commercial vehicle, domestic passenger, as well as JLR. I haven't seen these kind of numbers ever from all the divisions put together. So when you have everything going right for you, then intuitively you feel that, yes, I think problems around the corner. And overall, I think the macro headwinds will certainly impact JLR's growth going ahead or so. And valuations also have moved up. It's not that cheap anymore. So from that point of view, I wouldn't want to add into or take fresh position into Tata Motors. But as an investor, I think if you have a longer term view, then certainly looking at the models and their excellent strategy when it comes to EV, keeping all of that in mind, you want to remain invested, but brace yourself for a minor correction.
Okay, all right. Dipan, thanks a lot for that. Well, talking about